So, Ian, just to get your response, do you think we will be or already are in a recession? And will we see a global recession? And if that's the case, we should continue to see earnings come down, market multiple to come down. In other words, we'll see stocks continue to trade lower.
Well, again, not all recessions are equal. Okay, so I saw a study that said based on what the market's decline had done prior to today, if there's a recession, the markets are still up 2%, and if 6 months later, and if there is no recession, the markets are up greater than 8%. Now, a recession that we might see where 2008 and things are really going bad is one thing. This is a man-made recession. Okay, so let's take a step back. You're afraid of what these tariffs will do to the world, and you leave the market, say, I think we're going to go way lower. What's the risk? Why you can't be out of the market? This is a headline-driven market. It's only down because of what he said yesterday. Is it possible he reverse courses? Well, he wouldn't reverse course in a way that puts him where he can lose face, but he might do so in such a way where he makes certain deal and says they gave us everything we wanted. We took their tariffs away. Here's a win for us. So this is most likely, I want to say, it should be his last term, but let's say most likely his last term, unless he finds a way to make a third term out of it. Does he want his lasting legacy to be that he sent the US into a downturn and destroyed the capital markets? He always touts how much the stock market went up. We calculated 83% in 2017 to 2021. But do you know there were about 10 to 11 5% downturns over that 4-year period? And there were, I believe, 10% corrections. So we're in one of those 10% corrections en route to plus 83. So we know he's pro-America. He wants to do everything he can for the stock market to work, for the economy to work, but he's laying out the foundation of the next 4 years, and he's getting it out early with the DOGE and with these tariffs. So let's hope that the noise quiets down a bit. The worst is out. Okay, yes, it's worse than they thought, but at least they can start plugging in their numbers into their models to calculate earnings impacts for companies. And then any successive deal that comes from this point is just incrementally better. So I'm hoping that the worst is done. Yeah, could there be a few countries that say, okay, you raised us this much, we're going to raise you this much? Well, Trump and his Treasury Secretary have already told them, you raise, we raise more. So it depends if you want to go into that game. But I feel the rhetoric from most of these countries are saying we are willing to negotiate. So that's what he needs. He needs stop talking to the cameras, have some closed door meetings, negotiate with these countries, and start showing press releases or announcements where these tariffs have been reduced or eliminated, and good economic deals for the U.S. have occurred with these countries. And then you'll see the market start to work. And even going back to your point on recession, even if it is a recession, it might be a 1 quarter blip recession, that may not be deemed recession, and one headline away from a deal or a tax cut, a peace deal, industry deregulation, any of those things might occur and send the market higher. So very hard to be out of this market. Yes, you don't want to enjoy the pain, but you need to. It's a 2-step forward, 1-step back process. We're in the 1 step back, but the 2-step forward might not be too far away.
I think too, it's interesting and important for people to understand, and it might be difficult for some people to understand what he is trying to achieve, which is he really is trying to bring back production to America. And so much production over the past decades has left, and he's trying to bring that back to really generate a stronger economy in the United States via production versus just consumption. So I think big picture is important for people to understand that is part of what they are trying to achieve here. Fair? I'm not saying whether you think it's fair. I'm just saying that's a good assessment.
It's a fair assessment. However, the reality is, if companies are going to close facilities elsewhere and start building facilities here, it's going to take time for that to start building production, right, and hit into the economy. So I think for the short term, yes, that's the big picture. In the short term, he just wants the trade surpluses, the trade deficits that he has with a lot of these countries to be improved. And just like we saw with China in 2017 to 2021, he got them to commit to large US dollar purchases of US goods. So I think that's what he's looking for, both some short-term wins and then long-term, yes, bringing manufacturing back to the US.
So interestingly, amongst this uncertainty, you gave us a consumer name to take a look at today in the QSR space, Cava. So restaurants. Tell us a little bit of, and then we'll pick it up on the other side of the break. But what exactly is Cava for those who don't know?
Okay, it's the new Chipotle, the new fast growing casual restaurant in the U.S. We'll talk
Okay.
about it shortly.
Oh, okay. We'll be right back.